Welcome everyone to Vested Interest. This is Shane back again for another Stock Pick of the Day video. It is Monday, December 9th. We are going to take a look at Comcast. This is out of the communications sector. This is one in my portfolio, so we will look at my position at the end. Now, before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. If you are a dividend growth investor, make sure you are subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click that subscribe button down below. Hit the notification bell so you're notified whenever we put out any new content. I do the Stock Pick of the Day video series Monday through Thursday whenever the market's open, where we take a look at a stock like Comcast that we're going to look at today and see if it's presenting any value based on the pullback on the day. And there is the thanks button down below for those of you who can that want to buy me a cup of coffee. Go ahead and click that. There's several tiers in there if you want to help me out that way as well. Any of the proceeds will go into 3 different portfolios. I'm going to split them up equally between my daughters, 2 custodial accounts, and mine. And if we do get any funds, we will cover that on the channel as well. Really appreciate everyone who can do that. And the other things are free. So that thumbs up, the subscribe, and the notification bell, those are all free, as well as dropping a comment down below. Let me know what you think of the videos. Let me know what you think of Comcast. Is it in your portfolio? Is it one you're watching? Or maybe you're one of the people today that was selling out of this one and part of the reason that it dropped down. Special thank you to the subscribers out there. You guys are awesome. The channel continues to grow because of people like you. Now, this is the Vested Interest Stock Screener. This is how we're going to go through the video today. We'll check out this criteria, see how it stacks up at the end. It must meet 5 of 8 to make it on my watch list. Since this is one that is already in my portfolio, this is also a back check to see if the company I should still be investing. Now, just because it makes it onto my watch list does not mean I'm investing. It means I want to do more of a deep dive into the financials of the company, taking a look at their balance sheet, their income statement, stuff like debt to equity ratios. Are their margins expanding? Is their revenue growing over time? Are they paying down debt? Are they issuing shares or buying back shares? What are their PEG ratios, price to book ratios? Price to free cash flow. I mean, there's a lot of different information there in the balance sheet, the income statement. And if you don't want to do that type of deep dive, Warren Buffett would recommend an index fund or an ETF that tracks the S&P 500, something like VOO or SPY. Both of those are actually in his Berkshire Hathaway portfolio. You can check that out by looking at their 13F. Let's get back to the video. Back to Comcast here. Check them out on their homepage, corporate.comcast.com. That's corporate.comcast.com. That's corporate.comcast.com. That is their homepage where I pulled this information from. Comcast is a global media and technology company. From the connectivity and platforms we provide to the content and experiences we create, we reach hundreds of millions of customers, viewers, and guests worldwide. And they are really a conglomerate, right? You probably know them like a cable provider, but they do so much more than that. You got their Xfinity Mobile, their Xfinity Mobile and Comcast Business. So if you have a business and you need, internet or phone, they would be able to provide that. Surpass 7.5 million lines. Universal Epic Studios, right? So if you want to go to similar to like a Disney, Universal Studios is very similar to that. They also do entertainment, right? So they have several different channels on cable, and they do movies like through their DreamWorks animation, The Wild Robot. That was actually, I watched that with my daughters. If you haven't seen it, it's pretty good. Takes #1 at the global box office. I think that's a little outdated, but gives you an idea of some of the stuff they do. Again, they are a conglomerate, have their hands in the entertainment, connectivity, data transfer, mobile phones, that sort of thing is what they do. Now, the reason we are taking a look at them down 9.5% on the day, we are talking about Comcast Corporation, ticker CMCSA, out of the communications sector, closed up the day at $39.05. 52-week range as low as $36.43, as high as $47.11. They are not quite to their 52 or within 15% of their 52-week low yet. They need to be at $38.44 or lower to be within 15% of their 52-week low. So they're getting close, but not quite there. They do have a market cap of $149.426 billion, a beta of 1. So they are pretty much right in line with the market. Not pretty much. They are right in line with the overall market as far as volatility. PE ratio is sitting at $10.53 per share. That's pretty low. Earnings per share, EPS, sitting at $3.71 per share. Earnings date, January 23rd through the 27th. Somewhere in that window, they'll be reporting out their next earnings. Forward dividend is $1.24. They are quarterly payers to divide by 4, though we will see that here in a little bit at the end of the video. and a nice starting dividend yield of 2.87%. Ex-dividend date, January 8th. They will pay out their next dividend on January 29th in 2025. Almost there, getting there pretty quickly. One-year target estimate, $48.25. So they actually see it over the next calendar year, setting a new 52-week high. We're going to look at dividend yield theory to see if this one is potentially undervalued. To do that, we look at their 5-year dividend yield average, 2.39%. We compare that to their current 2.87%, or over here where it says forward 2.87, same number. And since their current dividend yield of 2.87% is higher than their 5-year average, that speaks to undervaluation. The numbers are inversely correlated. If it's higher, that speaks to undervaluation. If this number was lower than their 5-year average, that would speak to overvaluation. So right now, at least according to dividend yield theory, this one is potentially undervalued. I like under 75% for a payout ratio. They're at 32.88%, so that gives them a lot of runway to continue to raise that dividend. They're also safe. There is no reason to think they would have a dividend cut. They can continue to pay down debt, make acquisitions, reinvest back into the company, and buy back shares. Let's see if they're doing that. We're going to look at free cash flow first, though. I like growing free cash flow over time because typically if a company has growing free cash flow, not only can they do the other things like pay down their debt, buy back shares, but they can also, buy back shares, right? Pay down their debt, make acquisitions, reinvest back into the company, and buy back shares, as well as raise that dividend like we talked about a second ago. Going back here, December 2021, you can see $17 billion in free cash flow, and some change here. 2022 was 12.6. 2023 jumped back up. So dropped to 12.6 from 2021, but then it jumped back up in 2023 to 12.9. Trailing 12 months, we're not quite through December, so this does include part of last year's 2023 numbers, but pretty close to end of year numbers now at 10.9. And looking at the repurchase of shares, they were at 4.6 billion in 2021. Big jump up in 2022 to 13.3. A little bit down in 11.2 in 2023, and so far looks like they're not going to hit their numbers from 2023. Looks like about 10.4, so it depends on what they do in December. But it does look like they've got some decreasing free cash flow as well as decreasing repurchase of shares here, which makes sense if your cash flow is decreasing, at least over the last few years, 2 to 3 years here, right? Jump up here, you can probably account for the drop in free cash flow by the shares here. I'd have to do the math, but that looks like continued free cash flow growth in 2022. But 2023 here and so far in 2024, it does look like we've got some decreased free cash flow as well as decrease in the repurchase of shares. Now, we're going to jump over to stockanalysis.com. The previous page was Yahoo Analysis information. That's at least where I pulled in information from. This is going to be from stockanalysis.com. I am not affiliated with either site, and I do recommend more than one site for information so you can make sure the information you are looking at is accurate and up to date. Sometimes these sites are behind updating their information. Sometimes they're just wrong. It happens. So again, I would recommend at least 2, if not 3 sources for information so you can back check. Now, they do have 17 analysts that have taken a look at this. They do call it a consensus buy. Low estimate of $42. It currently sits lower than their lowest estimate, and the $42 would represent a 7.55% increase from where they currently sits. Average estimate of $47.84, pretty close to what we saw with Yahoo Finance on the previous page. That would represent a 22.51% increase. And if it happened to hit their high of $60, that would be a 53.65% increase. All the while, you could collect that 2.8% dividend yield. Now, I like to jump into statistics and look at return on equity and return on invested capital to see how well the company is reinvesting back into itself. And I like 10% or better for both of these metrics. ROE, return on equity, sitting at 16.88, beats the 10% I'm looking for there. But return on invested capital is a little low at 7.62%, so not quite at the 10% I'm looking for there. It's got to hit both for me to give it a check there, so it's not going to get the check. EPS growth, I like 5% or better forecasted over the next 5 years. They're sitting at 10.73%, so check there. Revenue growth is at 1.74%. This is not one of the metrics I use as an initial screener, but it is one of the ones I do on more of a deep dive, so I thought I'd add it in because it's right there above EPS when you look at stockanalysis.com anyway. Now, Comcast, as I mentioned early on, I do have a position here. I do have 216.54226 shares. I am down slightly with the drop today. I was up until today, but a 9% drop wiped that away and put me into the negative, down 4.46% or down $393 and some change. But it also puts this into potential buying opportunity now that I'm in the red a little bit. I wouldn't mind adding to this one a little bit, bringing down that cost basis, bringing up my potential future returns, and increasing my dividend yield. So this one is in my portfolio. I may look to add to this one, if not this week, definitely next week if it is still down. Quarterly payer, as we mentioned, payout ratio is low. I like 75% or under. Anything under 50% is very low in my opinion. This one's sitting at 33.49%, so lots of room to continue to grow that dividend, and they are doing just that at 6.9%. 5 years of growth. Buyback yield is positive at 6%. Shareholder yield positive at 9.14%. Very good numbers there. You want to see positive buyback yield. That means they're doing it whenever the stock is cheap. And the shareholder yield, you want to see positive as well, because that's your return, right? So you want to see that your yield is positive. Now, they do pay out on the January, April, July, October timeframe, which is off the main schedule of most stocks. Going back to July 2022 here, you can see they were paying 27 cents per share. April 2023, they raised it up to 29. April 2024, they raised it up to 31. That's the most recent. I would anticipate another raise in April of 2025 here. All right, let's check out the screener here. Understand the business. That's where we started. Check their growing free cash flow. They've had a couple years, looks like they've been down. Growing dividend, yes, growing at above 6%. Dividend payout ratio is under 75%. It's actually under 40%, under 35%, really. So very low. In my, obviously, it's not 1, 2, 3%, but 30% is very low in the grand scheme of things. Dividend yield theory says it's potentially undervalued, so check there. It is not within 15% of a 52-week low, very close at 39, but it needs to drop under $38.44 per share. Return on invested capital, return on equity, only got one of the two out of this one, so no check there. But earnings per share growth was in the double digits, just over 10%, so it beats this 5% that I'm looking for, so check there. So we're looking at 1, 2, 3, 4, 5. If this one wasn't already in my portfolio, it would make it onto my watch list. Since it is in my portfolio, again, I'm looking to add here with the pullback, and it still meets 5 of 8, so it would still be one that I'm not real concerned with. I may do more of a deep dive into the financials anyway, just because I haven't looked at this one in a while, and it is in my portfolio. Well, that is it. Let me know what you think of Comcast in the comment section down below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community. Drop a comment down below. Let me know what you think. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. I will say it is getting harder for me to respond to all the comments out there. If I don't respond to yours, it's not that I'm ignoring you. It's that there's so many now with so many subscribers that it's just getting hard to respond to all of them. So I will try to respond. Maybe I should start changing that to say I will try to respond to your comments on the day I post a video. Beyond that, I can't make any promises. Well, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in the presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.